I'm Gaurav Sharma. I'm an independent energy analyst. I first started writing about the oil and gas sector way back in 2004, and it sort of kicked on from there. Did it for 2 or 3 years, and then sort of moved on to covering macroeconomics and the Bank of England and all the rest of it. And at that point in time, I realized, I like this covering the sector. I have expertise in the field, and I thought, what I should do? I should perhaps start writing for myself with the whole digital revolution and so on. I started blogging on oil, and it really sort of took off from there. And so it's been almost over 10 years of analyzing the markets, and almost the last 7 I've sort of analyzed it for myself, and that has sort of led on to Forbes and CNBC and broadcasting outlets and things like that. And it's a fascinating sector. If you look at it, it's seen highs, it's seen lows, it's seen upheaval. It is also directly intertwined with the geopolitics of the day, and sometimes it does defy logic.
That's going to lead me on to a question about you've been in the market, you've seen a lot of change during that time. Are there any standout moments that you reflect on with glee or sorrow?
Well, I'd say if you look at it in sheer academic terms rather than the current market analysis, you'd have to go back to the 1980s. Of course, I was a young kid then, but from what I've read, that was quite an interesting time. And part of it sort of reflects onto the state of affairs as they currently stand. We'll come to that in a moment. But some of the key moments that we've seen were sort of around the global financial crisis. Now, what happened was in 2008, as I recollect, the US dollar started weakening. That reflected in the oil price because a weaker dollar meant a higher oil price, and the US housing market crisis had not gone beyond its borders then. It did later down the sort of financial cycle, but hadn't gone down as yet, and the US started feeling the pinch. The price of oil started climbing. By 2008, we were somewhere around $144 a barrel. And there was all sorts of pandemonium, people calling on OPEC to cut, sort of raise production and things like that. And then suddenly, within a short space of 12 months, when the financial tsunami, as many commentators prefer to call it now, hit the wider world, and the American financial crisis became a global financial crisis, it sort of plummeted all the way down to $37. So, what we're seeing at the moment, I would still say it's not along similar lines. What we are seeing at the moment is what I would describe as a price correction. Why do I say so? I say so because from what I gather and what I've been sort of tracking for the last 6 months, it is a much needed correction. There's plenty of oil in the market. And it was not reflecting in the price of oil up and until June. And then suddenly there was a realization, a wider realization that there is plenty of oil out there. The economy, as it were, is sort of, it's not on a rocky footing, but it's not in a very happy place either. So the demand uptick wasn't there, and suddenly it started reflecting in the price of oil. And it is very, very different from what happened in 2008, because in 2008 there was a complete collapse of confidence. The supply dynamic in back in 2008, 2009 was pretty much stable, but the crisis of confidence made the oil price plummet. And of course, now here as we sit, there are 2 factors. I would say there is a supply side increase, and secondly, the US dollar is a lot stronger.